Hey guys, welcome back to another episode of Off the Block. Here is Max at 21 Shares, your investment strategist. Unfortunately, I am going to be alone today, but that doesn't mean that today's episode is any worse off. Actually, I think it's one of the most exciting episodes that we've actually recorded to date. And for that, I'm joined by Tycho, and we're going to be talking about the rise of digital asset treasury companies in 2025. I know it's a term you guys have heard a lot throughout the year. They've been really picking up steam ever since the summer. Different strategies are evolving not only with Bitcoin, but also other crypto assets. And we have none other than Tycho, who is actually on the ground with his very own DAT company as well. And so with that said, I'll let you introduce yourself and tell us about all the exciting things that you're working on.
Yeah, absolutely. It's a pleasure to be here. And yeah, my name is Tycho. I guess working in the Bitcoin space since 2020, 2021. And basically all those years I've basically been working on this one question of how to turn Bitcoin from an idle asset into productive capital. So first by working at Stacks and leading a lot of product developments there, right? Stacks is kind of the leading Bitcoin layer 2. Then by co-founding Zest Protocol, where we do a lot of borrowing and lending against Bitcoin, the assets in a DeFi environment, and then now more recently also alongside that running Bitcoin strategy at Treasury, which is an emerging Bitcoin treasury company that aims to be listed on Euronext Amsterdam. I think you're muted on my end.
So thanks for that, Tycho. I just wanted to ask, so what is Treasury's ambition then? Is it really to become Europe's largest Bitcoin treasury company?
Yeah, I mean, I think it's really to run at the opportunity for Bitcoin treasury companies in Europe. So we've seen that, of course, in the US, you see strategy and a lot of Bitcoin treasury companies that have really kind of captured the imagination and are making very strong inroads in the stock market. Of course, in Asia, we've seen Metaplanet, rise with a lot of Bitcoin. I think over 20,000 Bitcoin already. But then in Europe, we just haven't really seen anything yet. While Europe is obviously like the second wealthiest continent in the world, there's a lot of capital stuck in fixed income products that don't really yield much. But no Bitcoin treasury has really managed to cross the chasm. And that's because none of the Bitcoin treasuries that are listed in Europe have managed to get to their main exchange and actually, been able to reach scale. So yeah, in Europe, we're still very early, and it's natural for there to be a European winner as well.
No, I'm happy that we have a European player that's joining the fray in a very serious manner, because in Europe we've not known to be the fastest movers when it comes to innovation over the last maybe 20, 25 years. So it's good to see that we're actually making a name for ourselves with digital asset treasury firms too. So before we get into the body, which is what I'm sure most people are excited about, we like to play a little game of good cop, bad cop. Usually Darius is obviously the bad cop. But today I'll have to play both sides, and just want to ask a little bit some rapid fire questions just to get to know you a little bit better. And I imagine one question that's probably on everyone's mind is when and how did you first hear or get into Bitcoin?
Yeah, I think the Bitcoin was sort of always a bit in the background, I think, in my life as something interesting. So I think I heard about it at school for the first time, and there were even kids in economics class who gave little presentations about Bitcoin, and it was always seen as this kind of interesting sort of internet money kind of thing. And so it was always there. It was always on the background. It was always interesting. And then as it really, started getting bigger and, crossed like, say $1,000, I was like, well, I should probably know how this thing actually works, because you keep hearing about it, but how does it actually work? And is it a good thing? Is it a bad thing? Like, I feel that I have a very uninformed opinion about it. And then I started actually looking into it and didn't really look back.
That's great. I actually also heard first about Bitcoin, during my high school years as well. Unfortunately, didn't put in any money. That's we live and we learn.
Same here. You never really put something in when you first hear about it, right?
No, exactly. I always say it's better to do your homework first so that you are investing in something that you actually understand in. Bitcoin, there's a lot of debates that often surround the future of Bitcoin and from a technological perspective where it can continue to grow. And given that you're actually very involved in this space, also with your work in stacks, I'm curious to hear about what's one concept, one Bitcoin concept that you never get tired about debating.
I think it's really the question of Bitcoin adoption, right? Like how is Bitcoin going to go from an idle asset into productive capital, right? That actually can work for people. So not just a store of value, but actually something that's used in the process of value creation and capitalism.
I think that ties closely into my next question, which, is a debate that people in the Bitcoin space often have, and it's maybe tied to your previous response as well, is do you therefore think that Bitcoin should have smart contract capabilities? Where do you sit on that boat? Because there's obviously purists who believe that that shouldn't be the case whatsoever, and others that think that that's the way forward for Bitcoin to continue to compete in the space. And what's your take on that?
Yeah, I think the most unique thing about Bitcoin is that it's software that that's still compatible with the versions that were released in 2010, 2011. And if you really think about it, like there is really no software that exists that works like that. I mean, try to find like some game or some version of a program that was released in 2010 and try to install it on your computer, it won't work. But if you take Bitcoin Node software from 2010, 2011, and you try to sync it, it will just sync to the latest chain tip, and it will run. And that resiliency is just really unique, and that's what makes Bitcoin so special. However, like with Bitcoin as it exists today, there are a lot of things that can be built around it in a lot of ways that kind of smart contract capabilities, right, for BTC the assets can be bolted on, right, onto the existing immutable base layer. So I would rather focus on that than sort of trying to get into a debate of changing Bitcoin, because it's it's something that's just
No,
not very
makes
fruitful.
sense. No, I appreciate it, and I like the analogy that you made as well. Now, enough about Bitcoin. What is there, and what is a non-Bitcoin crypto project that you're excited about?
A non-Bitcoin crypto project that I'm excited about. Well, I would say like I'm generally, in the crypto space, like quite excited about the type of innovation that we see on Ethereum and on Solana, and specifically, decentralized finance there. I think it offers huge opportunities for automation for finance as we know it today, to make it 24/7, to make it internet native, right? That internet programs can interact with AI. And I think that's really where the big next phase for adoption for both Bitcoin and crypto assets is going to come from down the line, because it's like a huge tool to make Bitcoin more productive.
Agreed. Now we're going to go a little bit more into, rapid fire questions still, but your business line, which is what
Yeah,
is
let's do
the
it.
most misunderstood part of the Bitcoin DAT model? What do you think is
Yeah,
something, that investors or people should know about that perhaps doesn't get represented that well, let's say?
yeah. I think there's actually a lot of misunderstandings about Bitcoin and Bitcoin treasury companies, but I think they all kind of come from this concept that, you know, a lot of Bitcoiners, or like a lot of Bitcoin bros, as you could say, don't understand finance, right? And a lot of finance bros don't understand Bitcoin. And there's very few people who sort of sit in the middle of that Venn diagram, right? If you would take them as two circles and you would merge them. There's very few people who actually understand finance and who understand Bitcoin. And that's probably where most of the misunderstandings really come from. But that also means that that's where, the opportunity really comes from. Because for the people who actually understand both, and you don't have to have worked in finance to understand it, you don't have to have spent like 7 years in Bitcoin to understand it. But if you understand both those things, then that's where the asymmetric opportunity is. Just like with Bitcoin, like if you understand computer science and you understand game theory, you can quickly understand Bitcoin early on. But it's just there's not a lot of people who've done the work on both fields. So similarly with Bitcoin treasury companies.
No, I agree. I mean, it's been such a headline grabbing, theme throughout the year in 2025. 2024 was maybe, the explosion of the US based spot ETFs, giving access for investors to crypto assets in a very simple, regulated manner. And this year we've seen corporate treasuries surrounding digital assets. I mean, I think it's something that was inevitably going to come, but given how much media attention, that these kind of firms have also received throughout the year, it's obviously something that comes into maybe your average Joe's brain about how does this actually really work. And on that front, I want to ask you then, the MicroStrategy or the strategy model, do you think really that's a blueprint that others can follow, or do you think it's rather more of an exception because they had a little bit of that first mover advantage? And so anything that they do, comes with also heaps of attention, which does benefit the stock price maybe a little bit more advantageously than other firms. So just curious to think that is that a blueprint that others can follow or not quite?
So to understand MicroStrategy, I think you need to understand like a few other things, other things first, and to understand why it's something that can be replicated, right? So what MicroStrategy basically does is it securitizes Bitcoin, and it's very similar to developments that we've seen, say, in real estate, right? Like in the past 50 to 60 years, where companies are kind of taking real estate and mortgages and essentially securitizing it, right? Like creating wrappers for it and ways for these things to become tradable, and creating different financial products out of them that produce either a fixed yield or some kind of upside to the underlying asset, or kind of a combination of both. And that's what MicroStrategy is doing with Bitcoin, right? It's kind of firstly turning Bitcoin from an idle asset into productive capital. And then it's kind of creating these, security wrappers around it, first with just MicroStrategy, the stock, right? You get exposure to Bitcoin by buying this, but then by creating these, pref security, like these pref securities that are trading as well, which give different upside to Bitcoin, or give some kind of fixed yields, or upside to Bitcoin and fixed yields, right? Which basically appeal to different kind of investors to capture Bitcoin exposure without having the crazy volatility, right? That comes with just holding Bitcoin, the asset, or holding MicroStrategy, the stock. And, similarly to real estate, like there wasn't one company that like sort of owned the entire real estate securitization kind of business, right? And similarly, there won't be just one company that owns the entire Bitcoin securitization space. Now, of course, MicroStrategy will be a huge player. I think it will be the largest player. There's probably no doubt about that. But there will be other players, and specifically in different jurisdictions, right? Because to issue stock locally comes with all kinds of benefits for local investors, right? They can trade it during local hours. They can post as collateral with local banks. They can, it falls within certain regulatory frameworks, which maybe create certain tax exemptions for certain investors. The localization there matters, but it does need to be localized into an advanced financial market. So I think MicroStrategy is something you can very easily replicate in India or in Israel or something. Well, that might be difficult, but to replicate it in Japan or in Europe, definitely.
No, that makes a lot of sense. And one thing that people have often spend time in calculating, I guess, is maybe the max pain level, that some of these firms have to be at in terms of the Bitcoin price for them to potentially have to get rid of their holdings or sell some Bitcoin. Do you think that's the biggest risk for Bitcoin denominated companies? And if not, what do you think is the biggest risk? Because, I would imagine that having to sell your Bitcoin, that the problem comes due to the ripple effect afterwards, where people are maybe fearful that the firm is not liquid anymore, or at least, in the near term is not performing as it should be. But what do you see the biggest risk as for Bitcoin denominated companies?
Yeah, I think it's something that's a little bit overstated. The risk of MicroStrategy selling their Bitcoin. I think it's something that a lot of Bitcoiners see, or a lot of participants in the space see, and then they get the PTSD flashbacks, right, from Genesis and from FTX, and like, oh my God, like we saw that once, like, is that going to happen again? But I think some of those fears are a bit unfounded, because similarly with, those companies that securitize real estate, or public companies that hold real estate, and maybe at some point they sell a little bit of real estate, but it doesn't then mean that then the whole real estate market crashes, or they come into some sort of spiral where they have to sell all their real estate, so quickly. So I wouldn't say that is likely to happen, but just to really look at it from a first principles perspective, is essentially what MicroStrategy does, or what Bitcoin treasury companies do, is that they're in a perpetual fundraising cycle, right, to either create products or to fundraise for their stock in order to buy more Bitcoin. Now, it might be possible that there are sometimes certain market conditions in which fundraising becomes more difficult for these companies, right? Especially when there's like a big Bitcoin drawdown. But I think the past weeks have really shown like what that looks like, right? I mean, the past weeks, the Bitcoin fell from about $120,000 to all the way to $80,000. The fear greed index was at like all-time lows. I think it hadn't been that low since FTX collapsed, and Bitcoin treasury stock went down, but temporary, right? Some of these Bitcoin treasury companies briefly traded below their NAV, but most of them have kind of come up, and yeah, sure, there might be some bodies there, but those would likely be very small treasury companies, right, rather than any of the big ones, and they just continue. So yeah, I think that fear is a little bit overstated, and again comes a bit from this this asymmetric opportunity / problem that not a lot of Bitcoiners understand finance, and not a lot of finance people understand Bitcoin.
No, thanks for that. That makes a lot of sense. I mean, we've gone through the exercise of, trying to dictate the thresholds that, MicroStrategy would potentially, also have to state their Bitcoin. And we kind of came to the same conclusion as well, that it seems to be a risk that is largely overstated. And as you mentioned, just because, there would be in one day a potential sell of BTC doesn't mean that, the whole spiral necessarily comes down. So thanks for adding a little bit of hopium to my Monday morning. And my last question for you is, of course, we're not in the business of giving price predictions ourselves, but, given that you're in the space as well, we want to know, in 2030, what is your gut instinct for Bitcoin's price? What do you feel is going to happen?
Yeah, what do I feel is going to happen? In 2030, that's a very long time, right? And usually my experience in Bitcoin is that usually I've thought, for the space to improve or the price to improve, these things need to happen in 5 or 10 years, right? Like in 2020, I was like, like in 5 or 10 years from now, we'll maybe see a Bitcoin president of the United States. But then it just comes much faster, right? So it's very hard to make these kind of predictions. But I think broadly, Bitcoin just trades with the amount of liquidity that's added to the system. I think we're going to see a huge amount of liquidity being added to the system just by virtue of the US-China geopolitical rivalry and competitions, right? They need to monetize their debt. They need to build out their AI, their robotics, their defense. And that's just going to lead to, a huge boom in some form of debt monetization, money printing, as you could call it. And that's going to benefit Bitcoin. So where does that end up? Yeah, it depends on what the speed there is. But it would certainly be higher than it is today. And I wouldn't be surprised if it's at $1 million per coin in 2030.
These are the things we love to hear. But no, one funny saying I like to say always is, Bitcoin has no top because fiat has no bottom. And as you've mentioned, debt monetization, the continuing, capex spending of AI, we see countries that are treating them like strategic necessities. It's like an arms race, the AI spend out. So I don't think that is going to continue to slow down. I don't think, we're seeing in multiple jurisdictions that liquidity expansion is coming. Rather than the maybe slightly tight conditions that we had the year before or two. And so I agree with you that I think that continued rollout of liquidity is going to be the biggest driver of Bitcoin in the next 5 years. So that's it for our rapid fire section. And I just want to now go into really the episode body. And we're going to start a little bit about, your journey, Treasury's vision. And for those of you that don't know, Tycho studied at one of the most renowned universities, University of Oxford. And I want to know if your experience there, did it lead to your career that you've had up until now? Because Oxford is also a very traditional institution. So I'm just wondering if that pushed you into a certain direction now, and how that led to Treasury's founding, and why Europe is maybe fertile ground for a euro-denominated Bitcoin treasury firm. And just talk a little bit about your journey up until now.
Yeah. No, absolutely. I think, I mean, at Oxford, I think I think the main sort of takeaway from that led to Bitcoin was I studied history, right? And while I was writing my history essays in Oxford and trying to get good grades, I was always kind of looking for a bit of a unique angle, right, to telling a story. And the angle that I usually took was to look at money flows, right, or to look at kind of, okay, because most students don't do that, right? They look at, okay, where are the big armies coming from? Who are sort of the great people entering the scene? What do they do? What are the intrigues? But maybe let's take a step back and actually, let's look at where the money is coming from and who is running out of money, how and how that works. And yeah, if you just spend a lot of time studying that and spend a lot of time writing about that, you kind of start to realize that, especially the world of of currency and of finance, is kind of this ever-changing thing, and it goes from maybe sometimes certain assets or certain currencies are viewed as the reserve currency. Sometimes it's others. It's usually kind of a combination of different reserve assets that kind of exist alongside each other, and it's really not as clear cut as the present day at that time, right? Because I was like studying in the middle of the 2010s. I mean, dollar being the dominant reserve currency, having been so for a very long time, and not really seeing any change in that, or any reason to believe that would change. But actually, that made me realize that this is actually a very unique moment in history, right? It's not normal for the world to look like this, and I think that was kind of like the intuition that made me think, okay, like there are different paradigms that are possible, and actually, the time in which I live, which most people kind of take as the baseline, is actually very ahistorical or very strange. And then when you see like the growth of the internet economy, and you see assets like Bitcoin really taking hold, it's like, hey, that's something interesting. That's something interesting to look at and to zoom into.
Nice. So it's actually thanks to history that you found the future. That's quite interesting. I mean, I personally have read The History of Money. I think it's a brilliant book as well. And I think, studying the past can also make you more aware of what could be coming in the future. It doesn't always repeat exactly, but often history does rhyme.
Yeah, it's an intuition. You get a bit of an intuition for, how do different things, how do changes happen across time, and
exactly.
Yeah, and how can they happen in the present moment, right?
No, exactly. And cool. So now you have Treasury. You're based in Europe. And one question that I had is, how come Treasury decided to choose more of a public kind of structure through the reverse listing, on Euronext Amsterdam, instead of going with something more private, a private vehicle or private fund? What's the reason for that? Maybe for some people who aren't aware of the benefits of, being able to access broader markets like that.
Yeah, I mean, the point for these Bitcoin treasury companies is that they are liquid and they trade publicly. That's kind of like the baseline from which things start, because that is kind of the vehicle through which you can accumulate Bitcoin. That liquidity then also becomes the vehicle through which you can essentially monetize the volatility of Bitcoin by creating all these other products and securitize Bitcoin down the line, right? So you need to be traded on an exchange that is liquid. Now, in Europe, what we've seen, I mean, there have been a few like attempts at launching Bitcoin treasury companies, but they've all been on smaller exchanges, right? So not on the main exchanges in Europe, right, which are London Stock Exchange, Amsterdam, Paris, and Frankfurt, but on smaller cap exchanges. So often in those countries still, but then I call it like a junior exchange inside the same country. And stocks that are listed on junior exchanges, right, or not on the main exchange, they have much less liquidity, right? So if you look in the UK, right, you have Aquis, which is like the exchange where a lot of the Bitcoin treasury companies in the UK trade. Maybe the daily volume on Aquis is about $100 million, right? So that's really, really very little. Then, you know, those companies often don't have options, right? They don't have, and you can't really attract institutional capital in that kind of setup. So that's really the reason why we haven't seen, you know, the big kind of, you know, ballistic growth of Bitcoin treasury companies that, you know, you see in Asia and that you see in the US, right? It's not just that, not that Europeans don't want it or that they're not innovative. It just hasn't happened yet, right? And Amsterdam there is very interesting because, well, I mean, of course, Amsterdam is kind of, you know, the home of financial markets, right? The home of the joint stock company. It was kind of invented there, but also today it's, you know, one of the most liquid venues to trade at in Europe, right? The liquidity is somewhat similar to London Stock Exchange and Paris. You know, the largest company in Europe, ASML, right? The chip semiconductor machine maker trades there. A lot of other big companies trade there. It's plugged into all the trading apps around the world, right? Robinhood, Revolut. You know, you ask someone in Korea to open their trading app, and stocks from Euronext Amsterdam are there. So that's really like the springboard, right, to get into the mainstream and to open up the toolkit and the playbook that you know, Strategy and Metaplanet have been using in their respective jurisdictions.
Yeah, that makes a lot of sense. I mean, I hadn't even though I'm based in Europe and I'm European myself, I hadn't actually considered, you know, the fact that the European different jurisdictions means that it is a little bit more truncated, if you will, than what we have in Japan and in the US, and how that might be slowing down some of the adoption rather than it being a reflection of the European mind that doesn't want access to a Bitcoin denominated firm. So thanks for that little insight. I will definitely be taking that one with me on board. So you're not only on a mission, right, to become Europe's largest Bitcoin treasury company, but you also want to become really an institutional ambassador for Bitcoin adoption. And I think, if I'm not mistaken, you know, you guys had an acquisition also of Bitcoin Amsterdam, and you also have partnerships with BTC Inc. And is that part of your broader expansion strategy for Bitcoin in Europe? And how do you see that moving ahead from here on out?
Yeah, absolutely. I mean, Bitcoin treasury companies essentially are tools for Bitcoin adoption and access vehicles, right, for people to access Bitcoin or Bitcoin exposure who haven't really been able to do that yet. So in that, you know, taking that reality into account, you also then need to be an ambassador for Bitcoin, the assets, right, for, you know, everything that Bitcoin represents, to educate those investors to, you know, to get Bitcoin exposure. And then, you know, essentially then a lot of those investors might choose to do that through you because, you know, they know you, and, you know, it would be nice, you know, if you're just getting into Bitcoin, it's nice to have someone to talk to, right? And all of those things, or someone's content to read, or someone to follow, etc. So, you know, that we're taking very, very seriously. Bitcoin Amsterdam, you know, was just 3 weeks ago. It was, like, I would say, a huge success. I've been at all the previous Bitcoin Amsterdams, but not yet the one where obviously Treasury was leading the charge in organization. And yeah, I mean, we had huge speakers, right? Tyler and Cameron Winklevoss came, who are obviously the largest investors in Treasury. You know, made a huge impression on everyone, and on the media locally as well. And then also we had the finance minister of Luxembourg, who, you know, Luxembourg is I think the first European country that allocated a certain percentage of its sovereign wealth fund to Bitcoin. Yeah, he came to give a speech, you know, in favor of Bitcoin, and in favor of, you know, positioning Luxembourg as kind of the digital asset jurisdiction where, you know, a lot of this activity can happen in Europe. And yeah, that's also the kind of speaker who, you know, wouldn't have come to a Bitcoin conference previously. So we're kind of like, you know, making new inroads, right? Attracting new kinds of faces to these events. And yeah, that went everywhere, right? I think CZ from Binance retweeted it. It was like all over the media. That the finance minister of Luxembourg, had been said the line "Luxembourg hodls," right? And yeah, I think like to bring those kind of voices, right, into the debate, I think that really helps just the adoption of Bitcoin, or the understanding, or just to get more eyeballs to it.
No, congratulations, firstly. And it sounds like it was a great event. The twins were there. The finance minister was there. And yeah, I did see the fact that, Luxembourg was maybe, the first sovereign wealth fund to be allocating to Bitcoin. And they did it through, if I'm not mistaken, through ETPs or an ETF, which brings me to my next little subtopic that I wanted to talk to you about. Obviously, here at 21 Shares, we offered a diverse range of, crypto asset ETPs. And you guys on the other side are offering, Bitcoin exposure through a DAT. And I guess I wanted to highlight or talk to you a little bit about maybe some of the pros and cons of a DAT versus maybe some of the limitations when it comes to an ETP. Now, through this conversation, I've been noting some of the things that I think I see as benefits, and some things that maybe some investors should be more aware of. And I just want to run them through you. And maybe if you agree or disagree with anything, just let me know, and I'd be happy to hear your opinion. One benefit of a DAT is obviously that it is an equity-based exposure, right? That could limit some players if they don't want to get access directly to the spot asset itself. So that's already one benefit that exists for a DAT. Another benefit is the fact that you are able to use capital markets, whether it be through equity or through debt, to be able to accumulate more Bitcoin. And so for some investors, the benefit or the idea could be, if I'm investing into a sound firm that has sound fundamentals and knows, the Venn diagram that you described about knowing finance and understanding Bitcoin, they can continue to accumulate more Bitcoin than what's currently on their balance sheet, and maybe therefore they can increase what Bitcoin I have per share. Right, so that's all sound and logical. You have the potential for yield generation, if you will. So it really aligns the shareholders and the appreciation of the Bitcoin price. Now, on the limitations, and I think this is probably where I hope you have some pushback as well, is I've noted that maybe, and talk to me about what you've experienced maybe in the last few weeks, because as you said, we had a little bit of a market blip. But one of the potential drawbacks could be the premium discount volatility, right? And to effect, maybe you can explain a little bit about what is the premium discount to the NAV and what that means for investors. And then the other kind of drawback that I guess I would highlight potentially is you also have to probably evaluate, the company's performance aside from whether you want exposure to Bitcoin or not. So there may be a little bit of a layered risk. Do you think that's fair to say? And if not, I want to hear it all from the horse's mouth as well. The way that I see it is ETPs can provide a low fee, liquid, pure exposure, a little bit more vanilla, whereas DATs, they have the potential for higher torque, which is a benefit. You can use capital market strategy, but to some, it may seem a little bit like a more leveraged play on Bitcoin. So I'm just curious to hear your opinions on how these two different vehicles kind of stand out from one another. Again, I don't think it's an ETP or a DAT battle whatsoever. I think they're complementary vehicles, and they offer different kind of risk-return profiles that may benefit some investors over others. But I'm just curious to hear your thoughts.
Yeah, absolutely. So maybe just quickly sketch out the overview of like what the different things are, right? So there's ETPs, ETFs, and Bitcoin treasury companies, right? Now, what we've seen is that ETFs, that's sort of where the real adoption comes from, right? The Bitcoin ETF is BlackRock's highest highest revenue product, right, that they have on the shelf. Whereas like Bitcoin ETPs haven't really been able to to get the same kind of adoption, I'm not sure exactly why that is, or why the liquidity, hasn't been able to sort of, become as strong as, say, like ETF products. But it hasn't really been the case, right? If we look at kind of the past, the past years. Now, treasury companies, on the other hand, do or have managed to sort of, really get traction and really, basically, enable more investors to get Bitcoin exposure. And I think part of the reason why that is that they are structured as equity, and they issue debt, right? And if you think about like the sort of, composition of an institutional investor portfolio, you'll basically find that about 99% or 95% of all the wealth, all the capital in Europe is mandated to invest in equities and in debt, basically in those two things, and not really much in anything in anything else. So if Bitcoin is, not wrapped in an equity or a debt jacket, then this 95% of capital will never really be accessible, right? Or, to look at it from the other way, like institutional investors in Europe will not be able to access like the huge, upside that Bitcoin offers. Now, of course, they can buy MicroStrategy in some cases, etc. But some of those investors will have a European mandate, right, to only trade European stocks. Right? The CEO of Treasury King, he was one of them. He, was an asset manager. He had a mandate to only invest in European stocks. So how do you then get crypto exposure, right, or Bitcoin exposure? And like that, yeah, that's basically how most capital, where most capital in Europe really sits. So that's really I would say like the sort of the wedge, right, that a European Bitcoin treasury company can run into, and how it basically creates like a whole new, field of adoption that just hasn't really been cracked yet by existing products.
Well, makes a lot of sense. I think also one thing that we've seen, at least sitting on the ETP and the ETF side, is that from the launch of the spot ETFs, of what we saw over in the US as well, led to a little bit of a fee compression in terms of the fees that are charged on these ETFs over in the US. And so we did see a flow of different, a flow of capital also move over to the US based vehicles, as a nature that, a lot of attention and a lot of investors are obviously sitting also over in the US. But all right, thanks for the breakdown. And I want to just take one small pivot before we go into our final expectations and predictions. And I think this small pivot is quite interesting because you've also not only been working now with Treasury as well, but you are also the co-founder at Zest Protocol. You've also done some work previously at Trust Machines with Stacks, and also want to hear about whether, you see a potential convergence in your two affiliations, I guess. Do you see one day potentially using Zest to maybe, lend out BTC, and maybe talk a little bit about the people here who maybe haven't heard about Zest Protocol yet, and maybe just hearing your opinion about how this could go and in which direction it could head.
Yeah, absolutely. I mean, that kind of comes to what we started the conversation with, right? Sort of when I said, like, what have I really been working on the past 5 years? And that's turning, Bitcoin from an idle asset into productive capital. Right? And they're basically kind of, two pathways through which that can be done, right? Like one is to sort of embed Bitcoin more deeply into the traditional finance world, right? That's essentially what Treasury does. And then, on the other side, it's to embed Bitcoin more deeply into the decentralized finance world, right? In this kind of nascent on-chain world of on-chain finance. And that's what Stacks basically aims to do, right? So Stacks is essentially a programming layer, like a blockchain that sits like on top of Bitcoin, and that essentially reuses the immense hash power that Bitcoin has to enable programming of BTC the assets, right? So you can move Bitcoin from the Bitcoin base layer onto Stacks, and then there it can be programmed for financial purposes. And the largest application on Stacks is Zest Protocol, and that's the app that I founded. And essentially, what Zest Protocol does is there you can post your Bitcoin as collateral to borrow stable coins, right? And that sort of creates all kinds of yield generation opportunities for Bitcoin, the assets, in kind of the decentralized finance ecosystem. So I think both of them are kind of two drivers, right, towards the same purpose, which is to make to turn Bitcoin into productive capital. But they sort of take very different approaches. Now, I think one thing that we're seeing more and more of in Bitcoin treasury world is this kind of push for earnings, right? Like a lot of these Bitcoin treasury companies are they hold a lot of Bitcoin, and it would make sense for them to have some degree of earnings so that they're able to service their dividends, etc. And that's like an area where Bitcoin programming layers or Bitcoin lending, etc., can play a very big role. I mean, we saw like Fong Lee and Michael Saylor kind of say the same thing, right? Even going on CNBC to share some of their plans for, say, Bitcoin lending, etc. So we see that this is more and more coming into the mainstream in Bitcoin treasury world. And essentially, yeah, I think that's where a lot of the use for Bitcoin layers and Bitcoin programmability is going to come from in the end, because the Bitcoin treasury companies are not just passive holders; they are generating income.
Yeah. I mean, the way I see it is that you're very well hedged. We both agree that Bitcoin is the future, and maybe it's going to be entering through, traditional capital markets, and that is where you're working with Treasury. Or maybe we see Bitcoin being used more and more in DeFi as well, and being used more and more on blockchain rails. And you have Zest Protocol that you're working there. So the way that I see it, Tycho, is your seat is very comfortable, or you should feel very comfortable for the years on ahead. So once again, massive congratulations to all the things that you're working on. Inside of you, there's two wolves, and they're both working actually towards continuing to make Bitcoin the most useful asset in the world. So congrats. With that said, I think we've talked a little bit enough about what we're into and where we are in the current day and age. But I think I want to talk a little bit about expectations or predictions, and maybe also thinking about valuation. One question that I have for you is because, firstly, valuation in the crypto space for digital assets themselves is a ongoing science. But now we have firms that are firmly working within the digital asset space, and therefore there might be some different metrics that make sense to evaluating a firm. And I guess for you guys, what do you think is the most important metric for evaluating really a DAT's performance over the years? Like, is it going to be how much new Bitcoin they can accumulate, or what are some of these metrics that people should be aware of, I guess, going ahead?
Yeah, I think for investors, this is the main thing to look at, right? It's what is Bitcoin yield, right, which is essentially expressed in Bitcoin per share growth. Right, that's kind of the main metric that you can use to evaluate how successful the respective strategy is that the Bitcoin treasury company is pursuing. And that's also the metric that we think can really be supercharged by the massive European fixed income markets, right? And by being a player that is on the main exchange in Europe, and then also very deeply embedded, into the financial system, locally, which is like a huge, open opportunity currently, and that's what we think, or what we believe. And what we're very confident in can then really push that Bitcoin per share growth. So it's really about Bitcoin yield, what that percentage is, and how how sustainable that growth can also be into the future. Now, this is more for the kind of Bitcoiner investor, right? If a Bitcoiner is like, hey, I want to buy a stock, like, which one am I going to choose? Am I going to choose MetaPlanet? Am I going to choose MicroStrategy? Am I going to choose Treasury? You'll want to look at these metrics. You want to evaluate them against each other. For an institutional investor, right, it will be much more of a different question, right? So they will be looking at different metrics which are more binary, right? Like, where is this company incorporated? Who is managing it? What do I think of the management team? What do I think of the quality of the management team? As compared to some of the other opportunities that I have. What are my own constraints, right? Like, can I even invest in companies that are outside of Europe, etc. So that will be kind of a different question, but that kind of traction with institutional investors is then also what's going to drive Bitcoin per share growth in some way, right? Because the better you are at tapping institutional investors, then that also drives Bitcoin per share growth. So even though there are different motivations, they kind of do end up feeding the same metric, as it were.
Makes a lot of sense. I'll be doing my homework and seeing where I put my money in next after this call then as well. Now, one question. I'm not sure if you're aware, but something that we often do on a yearly basis is an outlook going into 2026. And I won't reveal the details, but we've obviously written one chapter about digital asset treasuries. And I'm just asking you, gut feeling again, into next year, how much in holdings do you think, some digital asset treasuries for Bitcoin specifically, how much do you think they'll be holding? If I'm not mistaken, right now it's at around 80, 85 billion. Maybe you guys have around, yeah, if I'm not mistaken. No, sorry. Yeah, if I'm not mistaken, you guys have around that much holdings in all of DATs of Bitcoin.
All of us combined, yeah.
Okay. So what do you think by next year? What do you think the market size can be for Bitcoin DATs?
Yeah, I think it will depend a lot on what the move for Bitcoin price will be, right? Because institutions are to some extent a bit reflexive, right? And the Bitcoin Treasury Company model also is, right? So in an up market, they can pretty quickly accumulate Bitcoin per share, and then in the down market, that is most likely slower. So the answer to your question depends then a lot on like what is the volatility in Bitcoin going to be, what is the upside in Bitcoin going to be, and on that, of course, that's anyone's guess. But I would say I think 2026 is shaping up to be likely a very exciting year. Right. I mean, 2025 has been a bit disappointing, right? Or it's not been, as fast, not as fast growth as we would have hoped. However, a lot of the things that we were sort of hoping for in 2025 are actually going to materialize in 2026, right? We're going to see the rate cuts in the US. We're going to see, huge sort of treasury QE, right? Basically massive spending in the United States. For geopolitical purposes, as well as the upcoming midterms. So I think there's a lot of opportunities there. And I think also for a treasury company specifically, the one thing to really look at is the inclusion of MicroStrategy into the S&P 500. When that happens, or when that comes close, I think that will really be like a catalyst moment for Bitcoin treasuries around the world. And yeah, these index committees are, can basically say that they are political. They've been resisting Bitcoin treasuries, but the longer they do that, the sooner that Trump and his sons will most likely start knocking the door, and that will change, right? So yeah, that would be my prediction for 2026. It depends on how well Bitcoin does, and I'm very optimistic.
Sounds good. Here at 21 Shares, we're also quite optimistic. We don't think, the current market environment is reflective of us entering a real, true multi-year bear market. So we do think that next year, there's a lot of these catalysts that you mentioned, are actually going to be materializing throughout next year rather than this year. And I agree with you. It has been ever so slightly disappointing, let's say. So do you think then next year, or, hopefully once strategy gets included into the S&P, do you think that marks the moment where Bitcoin native corporates are truly their own asset class?
Yeah, does that mark the moment where
It's like
Bitcoin
the
native
internet
companies
moment,
become their
maybe,
own?
for them.
Yeah, I think it would definitely be a moment of huge like legitimization, or like giving huge legitimacy to the business model, right? Because right now some of the index committees are a bit hesitant, or they're saying, well, these things are more like passive holders. Why would we include them, etc. Right? There's a lot of kind of pushback coming, and well, it will lead to a lot of inflows, right? Like let's be honest, right? If you're in S&P 500, you just get a lot of passive flows that that just push the stock up. but also what it will mean. And I think that the second big catalyst for Bitcoin treasury companies is how actually ratings agencies are going to perceive these companies. Like we already saw the B minus rating for strategy. And yeah, that obviously needs to go from B minus to triple A, or as close to that as possible. It's not there yet because in the B minus rating, Bitcoin was not counted as capital, and so S&P basically said, okay, this Bitcoin, it actually doesn't really count. Now, to have Bitcoin being recognized as capital, like that would be huge, right? From an institutional lens, and then also like a huge catalyst for Bitcoin treasury companies around the world. So I think those two things are really the sort of two pieces to the puzzle, which kind of come back to what we started the conversation with. It's like turning Bitcoin from an idle asset into productive capital, and yeah, like it's only going into one direction.
Makes sense. And it always goes back to that Venn diagram that you also explained us at the beginning of the call, that you understand finance and Bitcoin, and together that's kind of, the era that we're in with these DATs. Well, cool. That's it from my side. I wish I could have you for longer so I could learn even more today, but unfortunately, we just have Tycho for the 1 hour today. Firstly, huge thanks for having for being on the show with us. A lot of food for thought on my side. It's Monday. I had been on holiday for 2 weeks, and now I have this, implosion of knowledge that I need to swallow. So thank you a lot for that. We learned a lot about the emergence of Bitcoin DATs, about different, strategies when it comes to building crypto asset treasuries, and of course, the rise of them now in Europe and how that may lead to the next phase of institutional adoption of Bitcoin in Europe. We had Tycho with us. Huge thanks once again. Please be sure to give him a follow on LinkedIn and look at all the exciting things that he continues to be working on. If you have any final thoughts, Tycho, please let us know. And otherwise, please be sure to subscribe, to follow, and to tune in for the next episode of Off the Block. Many thanks, and thanks once again, Tycho.
Yeah, it was great. Really enjoyed being here, and yeah, thanks very much.